This roadshow is brought to you by ResearchBytes.com.
Thank you for being here for our third quarter earnings press conference. As usual, we'll start with opening comments from our CEO and Managing Director, Mr. Chandrasekharan, after which we'll take questions. Over to you, Chandra.
Okay. Good evening to all of you, and let me first start by wishing you all a wonderful new year. Thank you for being here. On the earnings for the quarter 3, I would like to start by saying that we have delivered a good set of numbers on a seasonally weak quarter. Our revenues crossed 24,500 crore mark, 24,501 crore, 2.9% growth sequentially. On a constant currency basis, it was 2.5%. And our net income also grew by 2.9% to 5,444 crores sequentially. Our operating margins improved to 27% for the quarter. And the growth in this quarter was primarily pricing led. We had a growth of 2.3% due to pricing, 40 bips due to volume, 40 bips due to currency, and a negative 20 bips due to the offshore movement. So that's the breakup of the growth numbers. And the growth has been pretty broad-based. We have grown across all markets. The growth has been extremely strong in Europe, over 6.5%. And North America has done well on a constant currency basis, about 2.2%. Latin America over 10%. And UK has been soft, primarily due to the weakness that we had cautioned in Diligenta. So it has been a negative growth of a little over 1%. And India has been good, a little over 3%. And APAC has also done reasonably well. So overall, from a geography perspective, the growth has been pretty broad-based. From an industry perspective, again, it's pretty broad-based. We did very well in all sectors except energy. Energy sector is facing a lot of stress, so that degrew. And retail, as we had explained, in Q3 has a huge holiday season and basically a switch off on all discretionary work. So retail was subdued. I think it's about 1% on CC terms, and everybody else, every other industry unit is about 2%. So pretty much secular growth. And from a services perspective, we had an excellent growth from a consulting and asset leverage solutions, and every other unit has pretty much grown above about 2%. The only unit which has been rather flattish or marginally grown is ADM. So, but overall, it's a pretty broad-based growth from a market perspective, from a industry perspective, and from a services perspective. The client additions have been spectacular. If you look at the client metrics, it is probably one of the best quarters. We added a $100 million client, and we added 350 million plus dollar clients, and we added a 5 million band by 20 clients. We added the 1 million band by 21 clients. So I think the client additions and the movement of clients across revenue band has been one of the best in this quarter. And we at least closed 7 large deals across 5 sectors. Very strong out of the 7 is BFSI, 4, 3 from banking and 1 from insurance. And then we had 1 deal each in life sciences, airlines, and retail. So very strong deal closure for the quarter. The deal pipeline is very strong. Initial indications from the customers are that they're going to be spending money in the next calendar year. And TCS is poised for industry-leading growth this year. And we are making all the investments in an accelerated fashion. Our employee addition And employee addition has been pretty robust this quarter. On a gross basis, we added 16,561 employees, which essentially takes the 9 months headcount addition to well over 52,000. We had said the employee headcount for the year will be 55,000, but we are absolutely sure to be exceeding that materially for the year. And the utilization has been an all-time high, 86.7% excluding trainees, and including trainees is 82.1%. And we just have to keep in mind that the volume this quarter is low, primarily because of the holiday season and the furloughs. And people have also taken a lot of leave, considering that there has been an opportunity for them to take leave. Otherwise, I think it's a pretty strong quarter. Our attrition is about 13.4% overall. So these are the comments that I wanted to make with respect to the quarter results. Let me also take one more minute to reiterate the comment on the employees. We issued a press release a couple of days ago. I just want to reiterate to all of you that TCS is in a high growth mode, and it is hiring significantly. It is always done the right thing from a client perspective, from a shareholder perspective, from an employee perspective, and that's why we have grown. And there is no rumor, no truth whatsoever in any rumor about layoffs or any numbers thereabout. And I've given you the numbers in detail. That number I've given you is a global number. That's not even an India number. The 2,574 people is a global number. If I subject it to by geography, it just becomes, no geography has a 4-digit number. So given all that, I think that's a sheer rumor that should be put to rest. And I want to say that we are extremely positive, and we see tremendous deal momentum, and we are poised for another exceptional year next year. Thank you so much.
Thank you, Chandra. We'll start with Kritika Saxena of CNBC.
Hi, Chandra. Happy New Year to you. Just to clarify quickly, I think I missed that. The volume growth is 2.3%?
No. The growth split up is pricing is 2.3, volume is 40 bips.
Okay.
Another 40 bips is currency. Negative 20 bips is offshore movement.
Okay. A broader question that I think everyone in the IT sector is asking. When we started the year, you had indicated that FY15 could be better than FY14 based on the conversations you had with clients. Over the last couple of quarters, things have changed. Can we now say, I understand you don't give guidance, but can we now say that FY15 will at least be as good as FY14 based on the conversations you've had so far and how Q4 is looking?
What was the statement?
Based on, will FY15 be as good or in line
You mean
with
FY16 or FY15?
FY15, sir.
Okay. So you make a comment like that once, and if you made it wrong, you learn from it.
Okay.
You never make the comment again.
Okay. Based on the conversations you've had in that case, how is Q4? Are you well positioned in Q4 to be able to meet the growth targets that you had set for yourself at the beginning of the year?
No, I think with respect to the FY15 being better than FY14, I can never go back to that. Primarily because when I gave the commentary last quarter, I said we are short by 40 to 50 basis points.
Yeah.
Okay, we achieved a 4.74 or something like that. We should have crossed 5. Okay, 5.1. If you had done that 35, 40 basis points, that would have put us on a base, and that would have given us an additional 1.5%, which would have put us in a fantastic position. And when you miss that, you can never catch it. If you miss it in Q1, there's a chance that you can capture it in Q2. When you miss it in Q2, you can't catch it in Q3 because Q3 is seasonally weak quarter. That's the nature of the industry. So I had clearly said, what we missed in Q2, we will not catch in Q3.
Okay.
So I can't now say that I'm going to catch it in Q4. So That's not going to happen.
Demand environment has clearly changed. Based on the conversations you've had, we are in the budgeting cycle as we speak. For CY15 and for FY16, how is the deal pipeline looking like? Could it be flat versus last year? Because we started last year talking about how things are picking up, but there have been concerns, be it in the energy sector, in the retail sector, be it in insurance.
So I think from our point of view, I think I'm going to give you qualitative comments. First of all, from a pure TCS metrics point of view, our deal pipeline is pretty strong. Our order book is strong. Our deal closure is very, very good. Europe is doing well. US is doing very well. Latin America is beginning to grow. India is beginning to do well. So all markets are in good shape. BFS is doing very well. The momentum is good. The deal closures, even this quarter I have said 3 deals are in BFS and 4 deals are in the US. So the deal closures from a BFS point of view is very good. And also we have a very strong momentum in retail, in life sciences, in high tech, in manufacturing, all these industries. We don't have any client-specific problem. I can't say that we are having this issue, that issue. We have a headwind. We have been having a headwind in Diligenta because Diligenta is a long cycle business. Unless or otherwise we do a very large deal on closed books, we cannot see the revenues. And the closed books, by its nature, the revenue growth goes down quarter on quarter. Currently, we don't have a situation where I can say that next month I'm going to close a £1 billion deal or something like that. We don't have that. Okay. So I think there will be a little bit of headwind in Diligenta, in the insurance, but in the overall size of the insurance business, that is not very large. So
by when can that stabilize, sir, roughly?
Whenever it stabilizes, I'll tell you. So otherwise, there is going to be a small drop in the Diligenta business on a sequential basis.
Okay, Rajesh, a quick idea about pricing. There seems to be a little amount of commentary on pricing pressures. A couple of your peers, even global peers, have indicated that clients are asking for pricing discounts. There have been pricing pressures in the developed markets. For this quarter, how has pricing been? And if you could just break up the kind of commentary that you are witnessing. Are we likely to see pricing pressure based on the conversations you've had?
So as we have maintained, there is no secular pricing decline per se that we have seen. We have said that pricing is in a fairly stable band. You will see some amount of volatility period to period, region to region, or on a service line basis. So nothing much to call out in terms of a trend in pricing. What you see on the realization side is a combination of a bit of seasonality that you see. Typically in Q3, you see a slight uptick. We had called that out also. So, and the last comment is that what we're reporting is realization, not pricing. So not much of a trend change on pricing. This is realization, mostly it is seasonal.
Okay, Ajay, there's a statement in the release that says that FY15 hiring target is likely to be exceeded. By how much?
We have already done 52,700. I think Chandra talked about that. And initially when we started, we said we will be doing 55,000. So I'm definitely going to exceed, but by how much, let's wait for the quarter to end and then we'll tell you by how much.
Okay, last word, Rajesh, can you just quickly give us a color on margins? If you could just break this up. And margins have come in strong, given the seasonality of this quarter. Q4, what is the, without guidance, what is the kind of commentary that you are expecting? 26 to 28 basis points is the band that you're likely to stick within. So,
yeah, our target band remains the same, 26 to 28, and we have brought it in pretty much right in the middle of it at 27%. In this quarter, we have seen a 40 basis point gain from exchange. Our gross margin has improved by 40 bips, and our SG&A has gone down by about 20 bips, or rather increased by 20 bips, giving us a net improvement of about 20 bips on the margin. So we have managed it in a fairly tight band. It's a seasonally weak quarter, so quite happy about the margin performance. And we stay committed to our overall band.
Are your utilization maintainable at this range?
We are at 86.7, gone up from 86.2. And this whole year when we started, that was our plan, that we will continuously focus on our utilization so that everyone has the right amount of work. And we will definitely try to keep the utilization at these levels.
Priya Sheth, Bloomberg TV.
Good evening. Can you give us a sense on how the geographies will perform going ahead in terms of will the momentum continue? And also, can you give us an outlook on Japan, how that's performed?
I think from a geography point of view, as I said, we are very positive about North America, Europe, and UK. Barring the Diligenta, there will be a little bit of exposure due to Diligenta, but otherwise, I think all these three markets are doing very well. Latin America is, I think, beginning to grow, and I see that as a good trend. And India, I am confident that is going to grow from here. Japan has done well this quarter. Actually, it has a little bit better than the company average, I would say. Japan has done well. And we have a lot of opportunity in Japan, but we just need to keep at it because it's early days. Integration has happened. The teams are working together, and we are putting all our systems and all our account handling processes in place, and we are training both teams together. So there's so much work that's going on. So expecting a spectacular high growth like a hockey stick is not correct. But I'm extremely positive that we will grow in Japan on a sequential basis from here because we just have a strong set of clients.
Right. Look, can you give us a sense on the digital pipeline? What kind of contracts are coming your way? Are the contracts getting larger now that it has picked up steam?
Digital has been one of our biggest success stories, and we have a very, very strong set of offerings. Digital reimagination is the core theme. How do we help customers to transform themselves completely into the new world by bringing in all the technologies, whether it is mobile, cloud, Internet of Things, analytics. We are executing a large number of engagements. We are partnering with leading banks. We are partnered with insurance companies. We partner with retailers, thinking through the whole engagement end to end, and we see all of that ramping up to large deal sizes. I think what's happening is we are not picking only small engagement here, small engagement there. That's how it used to be. Now we are just signing up in this whole transformation journey as a digital partner. So we are helping them in thinking through their data first of all, and working with some outstanding companies. We don't name companies, but leading companies in the world. So I think our revenues next year will come from three dimensions. We will have a huge uptake on the digital reimagination dimension. Second one is what I call a simplification, which is a transformation of the existing IT footprint to be future ready. That will involve applications, that will involve infrastructure, that will involve cloudification of infrastructure,
quarter 2. The absolute number of people who have left is less than that. As far as the involuntary attrition is concerned, that's a year-long process, the multiple factors which come into play. And as a result, there is nothing that has got bunched as far as this particular quarter is concerned. That's a year-long process. There are multiple reasons for which it happens. And we are, as Chandra mentioned, we are in a growth phase. We are absolutely sure, and we are taking care of our employees from all angles. But at the same time, we are very performance-oriented as well. So we need to be. So given that fact, so that is what is causing it. So there is nothing that is coming in this quarter.
See, I really have to calculate, but basically I think I'll give you 2 data points, because what is important for you to understand is the concept. Okay, there are 2 points you have to understand. One is this 2574 number is a global number. Okay, and then no single country is 4 digits, as I said. We can give you endless data. If you want, you can come into our office and then play with the spreadsheets and then get all the analytics you want. But the most important thing that you need to understand is that the number is a global number. The second thing that you need to understand is that when we do the performance cycles, and after the performance cycles, you will definitely see a blip. And I don't know whether it is 100 more this quarter than last quarter, 75 more, 82 more. Actually, it is a meaningless exercise, honestly speaking.
All right. So you don't want to give for
See,
this
because
particular quarter.
I think what is important is that it's a complete figment of imagination to put some 20,000, 25,000. We didn't even.
No, you have denied that.
We didn't even feel that it was necessary to deny. Then when you all got worked up and then started sourcing your information from all social media sites, then we had to come out and deny.
No. Nobody put out referring to that, but you have denied that. But why is it, Chandra, you think that despite your vehement denials, it just keeps cropping up?
I don't know. Honestly speaking, this is something that for me to understand. The why the social media and why particular noise, I have no idea. Okay, this is something that for us to think about. Right. Yes, there is some learning for us. We've got to understand how the social media works. When somebody puts up a message, that's something that we've got to look at it. That's some action point for us going forward.
Right. You're saying in hindsight that you need to change certain things. That
either we need to change or we need to know how to react, when to react, what to react. That's something that we've got to reflect on. Reflect on what happened. But actually that noise was unnecessary for me.
Okay, on this particular topic, I just had one more question. Could you share the subcontractor fee as well? Has that also been one of the things that could be taking a dip? Because large part of the industry also feels that the consultants which are on contract could have been asked to leave and the contracts got terminated. Is that something also, if you could throw more light on, that we could see a dip in coming quarters, or has dipped in this quarter?
I don't think we have subcontractors here in India.
Subcontractors in India are very few, and subcontractors usually are more in the overseas geographies. And these are dependent on different projects, the kind of skills that you need. If the skill that you need is something that you don't want to retain in the organization for a long period of time, especially the low-end kind of skills, you will go with contractors. If the skill is such that which is pretty high and you don't have it immediately, you will go with contractors. They are brought in for certain purpose for a certain period of time. And I can't have a contractor for a very long period of time, because then they will claim principal employment, right? So as a result, these go as per process.
Right.
So there is nothing, there is no change as far as that process is concerned.
We hardly have any subcontracting.
All right.
A subcontracting is all international. As I said, we also have to understand why this noise.
All right. So while you're understanding, in terms of strategy, I mean, nobody is questioning any company on optimization of the workforce. But what I wanted to understand in terms of strategy, flattening the pyramid or increasing the proportion of offshore employees, is your mid-level of the pyramid getting too fat for your comfort? On strategy point, if you could throw more light on that.
Three comments here. The first comment is employee restructuring, flattening of the pyramid, and all these things are a topic, absolutely fine to discuss, and all these are. The first point I want to make here is that none of that is happening here. Whether it should happen, it can happen. If that is necessary, yes, it can happen. What is the process in which you do it is a completely different thing. In this case, our whole response is that none of that. That is why we don't like these words restructuring, layoffs and all that. It's none of that. Here it's only a performance exercise. The third point I wanted to make is that we are in a very high growth phase. We need mid-level talent. So as long as people are wanting to grow, people are aspiring to grow, this is the place. This is the place to be.
All right, so that was good for clarification coming in from you. One more clarification, Chandra. Of course, digital side, you are gung-ho about it. In fact, Tata Sons is gung-ho about it. Cyrus Mistry has written in his letter to the employees in the year as well. Now, this is one area where you've just given one figure of $5 billion in 4 to 5 years. That's a very wide range that you're talking about. Your peers have started giving some semblance of understanding on how this side is growing. If you could tell us in terms of contribution, in terms of revenues, or the percentage of your entire workforce which is involved in that, at least some parameters so that we get some sense of where this digitization is going.
I'll take your comment on board. Unable to reply now, but definitely will consider it for the future.
And what was the volume growth figure? I didn't catch it, I'm sorry.
Because she asked it, you don't want to catch it. So it's a 2.3% pricing.
You think we are competitive. Competition is good. Yeah.
I know. 2.3% pricing, 40 bips volume, 40 bips currency, 20 bips negative offshore. You see, now I can write an essay on this now. Third time.
And I want to understand one more thing. FY16, everybody has been asking you. You said you don't want to make the same mistake you made earlier.
You learn life.
What do you mean by that? Are you not very optimistic, or you were overtly optimistic about FY15, which is turning out to be not as you?
No, I think I am very optimistic. Okay, because for the reasons I said. I said our indications from customers are pretty positive. We don't have accounts where we have specific issues. Key industries in which we operate, not only the momentum is good, but also our deal wins are excellent. And all the geographies that I mentioned are all in good shape. So I feel pretty positive. But I don't want to make a one-line statement, which was, I'm not trying to back off or I'm not trying to be defensive or anything, which was a qualitative way of, because we don't give guidance, which is a very qualitative way of expressing how good the year can be. But then that kind of, it was written in Chandra's forehead completely. So everyone only saw that, and whenever they saw me, they only saw that line. So I think they want to see, I want everyone to see me, not any text. So I'm not going to make a one-line statement on the future, but I'm saying I'm pretty optimistic, pretty strong momentum. You will see TCS firing all cylinders.
Amol, Z Business.
Hi sir, I would like to hear your take on Indian market, specifically domestic market. In the beginning of the year you said that you're not bullish on the domestic market. What do you see now? I mean, do you see some growth right now? Do you see the market will pick up?
See, I think, Amol, if you see, I have been giving commentary on Indian market for the last 3-4 years. It's a pretty volatile market. We don't have a right mix. And we have worked very hard in changing the mix. And then after several quarters, in the last 2-3 quarters, our India team has done really a phenomenal job in restructuring the way they operate in the Indian market. We delivered a good growth last quarter. We've delivered a decent growth this quarter. And our pipeline is good. Our services mix is getting better. The direction in which we want to be. So at least where I am today, based on the data points I have, I'm pretty confident that India will continue to grow from here. How much growth? I don't know. But I'm at least confident that I'm not going to have a negative hit in the growth because of India.
Since you're talking about Indian market, I would like to know, because the budget will be there in the next month, if you could share your wish list from the government, if you could give some pointers that government should do for the IT sector.
I think fundamentally the ease of doing business primarily is the main focus. I actually, one is for the IT sector, and I think the domestic business and investments will grow, and foreign investments will grow in India if the ease of doing business and all the things that the industry has been wishing for in terms of infrastructure, in terms of reforms, everything else is done. That will propel a lot of growth for the IT industry. Okay, so that's something that we want. And then the second thing I would say is that the government deals, the procurement process has been very tough. All the government contracts have been very tough from a procurement perspective. The conditions, those things, and we are definitely will work with the government and hope the ease of doing those becomes easy. Then that will also help. But I think I am very bullish about India. I think we have a government which is extremely determined about making things happen. Every time you see the finance minister, you hear the prime minister, and all the things, all the steps they have been taking, you feel pretty confident. And so I feel the growth, not only for our industry, the growth for our industry because of all the things that will happen in other sectors in this country will be very good. So I am very bullish on India. I have always been, but now I even more.
Joshel from ET.
Hello, sir. So you mentioned that now is the time when customers are putting their budgets together. So could you give us some color? How do you think the budgets are shaping up? Are they is the spend going to increase, or is it the same spend but more in digital? Some color on how that's playing.
See, I think the spend is going to go in 3 areas: digital, simplification, and governance. These are the 3 areas. I outlined to you what they mean. So these are the 3 areas in which the spends will be, and it will vary from customer to customer and market to market. We think there will be a lot of investment going in digital, especially in the US, and a lot of simplification and some digital transformation in Europe. So it will vary from market to market, and retailers, or at least all the customers we work with, are significantly investing money in digital transformation. So overall, my take is that with some customers the budgets will be flat, some customers the budgets will be up. I am not negative about budgets. I am overall positive about budgets. Because my estimate is based on what I talk and learn from customers. Mine is totally based on what I hear from the customers. It's not based on research reports. We take into account the research reports, but we place more emphasis because at the end of the day, it's the customers who give us business.
So could you break it out? Which sectors might be flat? I mean, are we looking at telecom is flat? Or
Can't tell you that.
Okay. So
I wish I can read the crystal ball. Yeah.
So and in digital, I know that this question has already been asked. Just trying to understand, sir. It's, the SMAC contracts, because they typically start with a pilot. They are small, and then as the concept proves itself, it increases in size. So could you give me some color on how the size of the contracts may have been increasing, or are we still far away from the point where we'll see a significant size?
I think it is becoming material, if not with all clients, with many clients. The reason for that is we have been engaged in digital with the clients for 2-3 years now. So with many clients we work with, we have done many of the pilots and apps and little projects there, etc. We have done and been through that. So I think with many clients we are becoming even partner of choice for digital transformation. So in those cases, I think it may not be one large chunk you sign, but actually the quantum of revenue that you make is significant because you're working on a roadmap. You're working with a customer in reimagining the future, the point of arrival. Where do we want to go? We pretty much co-create that future with the customer, and then we are walking that path.
And just one follow-up on Amol's question about India. Yesterday, NASSCOM met, the Minister of State for Finance, Jayant Sinha, and they spoke about, the fact that about 5,000 crores of the IT industry's money is tied up in projects where disbursement has not yet happened, and the IT industry wants independent arbitrators in terms of solving issues when contracts come up with the government. So, do you think that these bits will have to be put in place before IT companies significantly start bidding for digital India projects, or will that
I'm sorry, yesterday I didn't attend, I was not part of the meeting, and honestly I've been pretty busy preparing for the board today and to meet you all today. So I've really not kept pace. I will go back and look at it, and if I have a comment, I'll tell you tomorrow.
Okay, sure, sir. Thank you.
Kenan Machado, Wall Street Journal.
Chandra, just in terms of oil and gas sector, globally, the issues that the sector is facing, how do you think you will be able to manage to maintain revenue in that sector?
It's a challenge. It's a challenge. I don't know. I don't know. We see headwinds in that sector. So we have to understand what the opportunities are and what the client priorities are. So we see headwinds there.
Couple of questions for Rajesh. If you could just elaborate on the note 4 about other income. If you could just explain that treatment of accounting there. This is 64,391 lakhs, your other income this quarter.
Yeah.
That if you could explain even now or offline. The other question is regarding the tax expense. Why has it gone up? If you could explain that.
So there's a quick comment on other income, and then we can take it offline. The other income per se has got two parts. One is the gain from forex, and the other is the gain on the treasury side. The treasury side, the Q on Q, it is about 20 crores, 25 crores lesser than last quarter, primarily because our average cash balance in this quarter was lower than the average cash balance last quarter. You will recall that we did our large dividend disbursement in early August. So we enjoyed a higher cash balance for the first month of last quarter. So that's just the base effect in that. On the forex side, we have done slightly better in terms of just the hedge positions have come in better. So we have had a better gain on that. Net is the impact that you see. In terms of tax, we have repatriated close to 880 crores as a dividend from our various subsidiaries. And there is a gap difference in the way this tax is treated in both IFRS and IGAAP. So you will see a one-off increase in the tax provision in the IGAAP side, which is coming up to that thing. So
repatriated from overseas subsidiaries?
Primarily overseas for us. But we will be able to offset that against a dividend distribution tax, which will come below the net profit line. So you see the impact on the tax line, but the benefit really comes below the net profit line.
One question for Ajay. Traditionally, for people who have known TCS and even people who have joined TCS vis-a-vis other companies, even if the salary was not as high as what the other companies would have paid, people used to join thinking that they'll get different opportunities, and if they are not good at a particular project, they could work on another project, and probably that's why this issue of involuntary layoffs probably took a huge this thing. So my question, Chandra, you can answer as well. If I am not wrong, in the previous years, TCS would reallocate, give a particular period of time, and even go to the extent of training employees. So what changed at this point that you had to resort to asking people to leave?
Can I add my question, which is on the same topic? The overall narrative on social media is that you're only laying off experienced people above a certain level, people who have 7+ years of experience. And these people are not given any sort of warning that they might be laid off. And they're just called into a cubicle and told that you, from 1 month later, you don't have a job. So my thing is, will you also relook at your, for example, the compensatory policy that you have for somebody being laid off? Because let's face it, even if only 3,000 people are being laid off, that will probably impact 10,000, 12,000 people, and probably screw up 2,500 home loans, all kinds of things. So and on social media, even if 2,000 people start to make a noise, it can actually affect your goodwill in terms of your future employees and all very, very hard. So will you rethink on your policy of how you go about doing this?
Let me. This is a very important question, okay, and I feel very strongly about it. So I'm glad you asked the question. See, I joined in this company as a trainee. Okay, I built my career going through the same process that every other person is going through. I've been a trainee, I've been a programmer, I've been an analyst, a designer, I've managed small teams, big teams, large teams, account management. I've been through the ranks. And I pretty much can identify myself with, it's not that I did it years ago, so it's all green in my memory. How I worked in an account in Washington, how I worked in an account in London, everything is green in my memory. And so we are very sensitive, fundamentally. And we invest a lot in training. And even now, any time that we look at the performance, always the HR has a policy to look multiple years. HR doesn't have a policy to take a decision to go on a one rank or 1 year rating or whatever it is. So it is a multiple year process that they have gone through. And we also would like to give as many opportunities, because now today if you look at the demand, we are training people in digital in thousands. It's not that we need 5 people, 10 people. We need large number of project managers. We need architects. We need technical experts. We need team leaders. We need people who are client managers. It's not that one particular skill alone is the opportunity. So fundamentally, the way we look at things is from an employee point of view. Okay? Having said that, this whole exercise this time has created a lot of noise. Okay? That is something for us to think about. What we have to think about, why it happened, all those things have to be analyzed. Primarily because maybe it's a communication failure. Maybe, I don't know what it is. I can't put my finger in the pie because the numbers are not even 3,000 people. He's saying 3,000 people. If you look at India, it's less than 1,000 people. See, it's another thing to say there is a restructuring, your business is in a situation, you have to do a restructuring. That is not the situation we are in. If that is the situation, how you deal with it is a completely different process. But that's not the process we are in. We are in a normal process. So if this is the situation, if this has created noise, it's something that we've got to reflect on, which we will do in all humility.
Noise which has happened on social media and all that. The other question was, is it because it's happened because a different, more experienced people have been laid off, or is there any way you're looking at how performance is measured? Are you rethinking on some of these things? I mean, it could just be a, exercise which is part of the normal routine.
See, we can answer this question in endless ways. But the point that I'm making is that it is a performance exercise. And that we do it every year. This year also we are doing. Some years you do it at a certain time, some other years you do it some other time. And all those things you can argue. This is different from last year, that is different from this year. You can go. But the point is that involuntary attrition in TCS has been about 1%. Every year it has been in that range. And this year is no different. And as I said, we are also employees. We have gone through the ranks. Okay, so there is, to my, the final thing I would say is that performance is equally important. And we have to have the performance process. Performance is part of every organization. It is true in your organization. It is true in my organization. Every organization has to go through. But we'll have to think, why all this noise? If you see the numbers, all the numbers I have given you, why all this noise? That's something that we have to think of.
Just to add to what Fred was asking. See, when you come in, the kind of opportunities that are being given, there are multiple opportunities that are being given. Even today, people are moving from one country to other country. They're moving from project to project. They're doing from technology to technology. As Chandra was saying, there's a lot of training that is happening in digital. A lot of training, see, a lot of niche work that we are doing today, a lot of transformation-oriented work that we are doing today. And it's not that people are not aware. People are told over a period of time. It's not a one-year exercise. It's over a period of time that people are told that what is happening, what are the kind of improvement that needs to be done. So it's absolutely normal.
And that's what it should be.
Yeah. It's a purely performance side. And it is at a certain level, what is also expected is there has to be a lot of initiative that people themselves have to take, right? In order to grow, in order to take up responsibilities, and not having too many constraints so that you can take up these responsibilities and you move up. So these are various things that has been looked at when we do this exercise.
Sure. One sec. Just hold on.
It's the same discussion is going on. I just wanted to understand one thing, Chandra. You have been harping on one particular point of involuntary attrition. what noise that is being created. And trust me, a lot of people have come back to us as a credible media channel as well, saying that these numbers are not true because there are a lot of people who've been asked to put in their resignations which don't come under the category of involuntary attrition. If that could be clarified, it would clear the air a lot.
See, from our definition, let me just define what is involuntary attrition. Anytime an individual leaves without giving a resignation letter would be involuntary. For example, let's say if somebody retires, that's an involuntary attrition because you're not giving a resignation letter. Performance, etc. There are multiple reasons of involuntary attrition. And in our data, anytime that a person is being asked, the person is given the information so that we will count that as involuntary attrition. We will not count that as voluntary attrition. So if it is instigated by us, we'll definitely count it as involuntary attrition.
See, I think, I want to be very respectful even of everyone. I think when somebody reaches a level and then, we find them to be not ready for the next level and suitable, that is not to say they're bad. Right. And you go and do a very good job somewhere else. So we've got to be sensitive to that. So the way the whole process is handled is that, okay, here you are not going to grow. So why don't you seek some other opportunity elsewhere? Can we help you? That is the philosophy. Because that's the way it should be. Because, it's not that no person is perfect for any company forever. You grow, sometimes you don't grow. So I think we want to be very sensitive to that, and that's how we handle it.
Performance is definitely dependent on the environment, the organization, and the kind of engagements. It's all related. So that's what I think. And if you are not able to grow here, does not mean that you won't do better somewhere else. And there's a lot of help that is provided to the individuals. We are also very, very sensitive as far as this is concerned. We do understand the pain that one goes through. It's not easy for us to communicate to somebody, right? It's as painful for us, as painful for the individual to whom we are communicating.
Shivani.
I think
just one
let's move on. Let's move.
Excuse me.
We are not going to talk about individual cases.
Can you just hold on? Can you identify yourself first? Shivani.
Hi. Hi guys, a couple of updates on the numbers. You said, Chandra, that henceforth India will not see any negative movements which we have seen in the
past.
Hope. How much of this is also coming from the
This
CMC?
is not my one-liner,
okay.
which you can come back to me.
Right. So how much of this is also because of the CMC part of the business?
No, it's nothing to do with that. Anyway, CMC gets consolidated.
Yes, it does.
So there's no change in that.
On the insurance bit, you did say the BFS is doing well. Any change in the insurance segment apart from Diligenta, which might still make you say that insurance will be softer for a couple of quarters, which you have said in the last quarter?
See, Diligenta is a headwind.
Right.
And apart from that, we need more horsepower to overcome the headwind. So I think we have said that it's going to be a little muted.
Right. And Rajesh, to you, considering the way currency is moving, any shift in the hedging policy?
Today, I think currencies fell almost 1.3% or so. These are unprecedented volatility in the market. We're keeping a fairly tight watch on it. As of now, our hedging policy has not changed. We have a hedge book of about slightly more than 4 billion, which is as typically weighed in the 1 to 2 quarter kind of a basis. But definitely we're keeping a very close watch on it. The cross-currency impact is very, very significant. And we will come back to you as and when we take a call in terms of any change to the policy.
Right, Ajay, hi. So you've said that this year again will close with numbers much higher than what you have stated. Higher. So will this be in lateral segment which you'll see more hiring, or will it again come from campuses?
Campus hiring that we have done, that is as per the plan and that we had announced. Total what we had given out for joining in this year was 25,000. So I did not do anything in between. And as far as next year campus is concerned, that also we have announced. We'll be doing 35,000 as far as next year campus is concerned. And we have already given out more than 32,000 offers. There's about 3,000 left, which will be completed now, between now to end of, within this quarter.
This is primarily lateral. Thanks.
There are certain in different geographies, and certain geographies will be junior level trainees.
Okay, Nevin, now you can have your question.
No, actually, in one of the petitions filed by the employee in one of the lower courts in Chennai, So she mentioned that she also got higher ratings in consecutive 3 years. But this kind of litigations happens every year, or is it one of the odd years that happened in this kind of incidents?
I think we would not like to comment on that. We have not yet got the court order, so we will deal with it as it comes.
Okay, last question to Kritika.
Chandra, I'm sorry, I'm not asking about the layoffs. I'm sticking to the quarter.
You can ask anything you want. You have the mic.
Chandra, volume growth, 40 basis points. TCS over the last, 4 to 5 quarters has had exceeding volume growth with an exception here and there. I understand seasonality is a factor, but what were the headwinds that really hit? And if you can break this up.
So simple, no? There are only two headwinds. Number of working days less. Furloughs.
That's the seasonality.
Furloughs.
So seasonality hit to such an extent that volume fell to that
Q3 is always a pricing quota. It's not a volume driven quota.
So the slowness that you are seeing in insurance, the slowness that you may be seeing across geographies or in specific ramp downs, did that to an extent hit volume growth?
Well, this quarter is primarily because of the reasons I told you. See, otherwise, we have been doing a fantastic volume growth. And retail, for example, BFS, for example, all these have been growing extremely well if you see the last few quarters. So there is no reason. There is no, as I said, there is no specific problem. So it's primarily a seasonal.
So safe to say that these issues won't continue in Q4 in that case?
I hope not.
Okay.
I don't think so.
Okay. Energy, lot of fluctuation in the sector. Are you also witnessing some kind of ramp downs across your clients?
Energy sector has a headwind. Okay, definitely it's a headwind. Definitely they are not going to be doing any big programs.
Yeah.
It's going to be, at least I would only budget the business as usual. So you call it ramp down or you call it no spend, whatever is likely to happen. We just have to be prepared.
Okay. Also, I wanted to understand from the initial conversations you're having with respect to digital contracts across the entire SMAC model, how does the pricing work in these digital contracts? Are these high margin businesses? And over the next 1 year, are you witnessing a significant percentage of your clients shift to digital versus traditional contracts? Of course, traditional will not die out, but...
See, I have this statement which I have used everywhere. The default is digital.
Okay.
Going forward, anything you are going to do is digital. Either you are going to transform the organization and reimagining the future in the context of digital technologies, and if you are not ready for that, you are going to do all the things so that you can get prepared to go digital. So the default is digital. So that's why I have to be very careful in giving metric to my friend Nisha Poddar, because he is wanting all kinds of information. I think it's going to go to such a fast pace that everything that you do is going to have a digital component. Then you want to start declaring digital as one of the items, then you're going to have a problem. We have to carefully think it through, what metrics we give, and what is the pickup, what is the pace. To my mind, everything is going to be digital. So the default is the digital game.
But sir, in that case, currently, what percentage of your clients are shifting their traditional business to digital?
Everyone, at varying degrees of maturity. All retailers, completely. All financial services have got a digital plan. All insurers are looking at digital. Everybody is trying to see, well, how can I go to cloud? And manufacturing companies are worried about Internet of Things, right? And this is a big opportunity, huge opportunity for the world. I mean, it's a big opportunity. Okay?
Right.
Nisha.
One more question. Rajesh just wanted to understand, going forward, what are the few levers which are going to boost your margin? Because now looks like after the RBI surprise rate cut today, rupee is getting better. Cross-currency headwinds, how are they looking at this point? Are they going to be a concern for the next quarter as well? And utilization at 86.7, at 86.2, we thought that there is no push further, but it looks like you have achieved it. Is there more headroom there? And which are the other levers that you'd be looking at?
Okay, multiple questions in there. The primary aspect of it is that we have said we will calibrate our investments based on the headroom provided by the currency against our target operating band of 26 to 28%. Over the course of the last 4 to 8 quarters, we have systematically gone about doing it. Our investments have been into continental Europe. We have made significant investments into Japan, which is the second largest market in the whole world. Margin is a play on scale. We expect to grow our investments in these markets over a period of time, and that will provide us the support that we need in our overall business. Currency volatility is a much more immediate thing, and as you have seen the currency volatility help us on the way up, it is likely to impact us on the way down also. Depending on where the currency settles down, we will calibrate our investments and our ongoing operations. And if there is a systematic or a trend change in our target band, we will communicate that. So the play on margins is a play on our investments. We have invested ahead of the curve. We have continuously done it. We intend to scale our investments. As we scale, we should see better margins. Currency is likely to have an impact. The direction of that depends on the volatility of it.
Thank you.
So our realization improvement is 230 basis points.
If that is it, then thank you very much, ladies.